If you're looking for high quality day trading education and professional level trade dissection and analysis, you've come to the right place. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you exactly that high level professional day trading education and content, all for free right here on YouTube and on X. So today we are going to be discussing how to pay yourself, profit taking, targets, all of that good stuff. We're going to go into detail. I'm going to show you and give you some examples of sizing that you could use in different situations, as well as going in and basically taking a deep dive into profit taking and why targets are so important. So give me a second. I'm going to fire up these charts and let's rock and roll, folks. Okay, so now that we are inside of the charts, we're going to talk about targets. What are they? And I know that might sound a little bit silly, but targets are often overlooked with new traders. As soon as they enter into a trade, they have delusions of grandeur. And because the stock is moving up or down, whether you're long or short, whatever direction of travel you want it to be in, you don't pay yourself because in your mind, in the back of your mind, subconsciously, because they're green candles, you think it's going to keep going forever and ever and ever. So you don't take any profit. And then what happens is it hits resistance and pulls back, and then you freak out. Now in your mind, you're seeing red candles and it's coming down, and you think, oh shit, I missed my chance. And that could very well be true. So let's just take a very quick second to discuss what I just said about green candles and red candles. It's very important. And it's something that's greatly overlooked. So because we have always been taught ever since, we're little kids, that green is good, red is bad. It's everywhere. If you look out in your day-to-day life, you'll see that everywhere. A green light means go, right? That's good. Red light, stop, right? You get pissed off, it's red, you got to wait, and so on. Stop signs are red, right? When we look at our P&L, green is good, red is bad. So what I'm trying to get at you is this is deep-seated subconscious type of stuff where when we're looking at green and red candles, that's where a lot of our problems stem from. And that goes back so far into, just how we've been, like I said, how we've been raised, how we've been taught, essentially brainwashed. And we need to really get over that, because what you're going to do is you're going to make irrational decisions based off of the color of those candles and what you're seeing. So and I'm going to give you just a little tip here. If you have problems with that, the one thing that I always recommend to people, to traders that have a problem with not paying yourself because it's coming up, or they can't enter coming into a level because that candle is red, change the color of your candles. Now, obviously, change it to a color that you're going to be able to recognize up and down, but do so. And it might sound silly, it might sound goofy, it might make your charts not look so pretty, but it is going to help you until obviously more time goes by and you gain that experience to where you can switch it back, because the color green or red no longer dictates what you do in your moves as a trader. So that's something that should be done. If you are having that problem, I highly recommend doing it. And you're going to see you're going to see a pretty dramatic increase in your ability to manage trades with far less emotion. So that's kind of number one. So now let's talk about why targets are important. Well, it's all about preparation. Everything boils down to preparation. To be a successful trader, you need to have preparations. That's why you're supposed to have trade plans. Now, I make all of my trade plans. I start preparing in the evening. Now, a lot of people think that doing scans might not be important because the market can change. And that may be true, that the market can and most likely will change from the time you looked at it in the evening to the time the market opens up. But the thing is, the people that don't do that, they are not prepared. They haven't went over the charts saying, well, if it does this, I'll look at that. Like, let's say it gaps up or gaps down. You'll have a plan for that. And that's what that's so important. Preparation and having plans. So I develop my trade plans in the morning at 9 a.m., 30 minutes to the market open. And unless there is a massive price action shift, those are the trades I take. I rarely deviate from that, rarely. And those levels that I place, you'll see a couple of blue levels on this. These are just levels that we're watching this morning, and it's early morning. We still have a couple of hours before the market opens here. So I'm just preparing. Now, once we get closer into the market open at 9 a.m., so that's 30 minutes, that's when my hard trade plans are being made. And I stick to those. Again, preparation is so important. So let's talk specifically about those targets now. When we're looking at developing trade plans, it's not just entries, okay? That's what a lot of people do. The majority of you, and I'll even ask you guys a question right now, when you make a trade plan, if you make a trade plan, and I hope you're making a trade plan, but if you do you have targets in mind? And I don't mean like way the hell and gone. I mean close targets. Remember, for those of you that are watching this channel, you have to define yourself first and foremost as what type of trader you are. Now, myself, how I define myself is I am a day trader that looks for short-term opportunity based off of first reactions into support and resistance. I am a technical trader and I am a day trader. So I'm looking for very short-term opportunity. It's not scalping. A lot of new traders have a misconception of what scalping is. This isn't scalping. This is day trading. This is how you day trade, and you can actually pull profits as a day trader. So now let's get into the fine details of why targets are important. I'll draw this out for you, and let me pull this screen over here just so then we have a nice blank canvas to kind of look at. And I'm just going to draw a few things for you. So let's say you have an entry level. So this is your entry level, and this is your target level. You can also look at it a different way. This level here is part of your trade plan to go long, and this level up here is part of your trade plan to go short. Now, in between this is your channel. Now, if we open up smack dab in the middle of that, it only has two choices. Either it's going to come up and test support or resistance, or it's going to come down and test support. So either it is a short or it is a long, and it really is that simple. So if we go long, as it comes up, what are your targets? Like as a technical trader, right? We're technicians. We're looking for areas that this could possibly reject. Now, I only have 3 areas here, 3 levels. We have our open, and then our target up top, which is our short, and then our entry for our long. So as we enter into the long, for our purposes as what we're talking about right now, our first main target is the open. Any area that it can come flying up into and bump its head and pull back, that's where your first target is, main target. We'll discuss other targets here. So, and then your final target is this, which is main resistance. Basically, to strip it down and boil it down, they are areas, targets are areas that it can come into, essentially reject. Okay. There is an opportunity for that stock to reject it and start failing. So risk is the only thing that we can really control and handle as traders. So we need to understand that when we are coming into these levels, you have to pay yourself. Because if you don't, like I explained earlier, let's say it opens up, dips into your execution to go long, you execute and it comes flying up. However it comes up, and you don't pay yourself, and you're waiting for this to pay yourself, okay? Well, a good scenario, because everybody is watching this level, so people that were long are going to start paying themselves, which can definitely create some sell pressure. And then it starts coming down. And because you were so green, your eyeballs now, so your eyeballs are going to start looking over at your P&L. And what you're going to notice is your P&L is going down, what it was a moment before. And you're going to start freaking out. And then you're going to start responding emotionally. So we need to cross that out. And we need to basically get ahead of that. We need to be proactive. So this is why it is extremely important to always pay yourself into that target. Don't wait perfectly for it, guys. Don't ever do that because you'll miss it. So as it's coming up into that, you pay yourself. Now, remember, this is something that you shouldn't be doing. You should be paying yourself on the way up. But what happens is it's going to come in here. As it's coming up, again, those green candles are going to start messing with your head. And you're going to think it's going to keep doing this. So you're not going to pay yourself. And the second it rejects, you're going to start paying yourself then. And you're missing out on some beautiful, beautiful profit there. We don't want to be doing that. We need to be trading professionally, and being professional is being proactive. So we need to pay ourselves into those levels. So give me 1 sec. I want to erase all this. So let's take a more a better approach here. Okay, because this is a more realistic approach. If we open up, we start selling off, it's not going to come straight down. It's going to go like this. And then you enter. You always want to be looking left. We've all heard that a million times. Look left. So as it bounces, it's going to come up into the first layer of natural resistance right here. That is the first spot for this to essentially bump its head as it's coming up. That's your first actual target. Okay. Now we can have main targets and greedy targets and all of that, but it is the first area for you to basically where it could possibly reject. I'll ask you guys a question. How many times have you entered into a trade and it comes up and you don't pay yourself and then it comes down and it fails? And you're like, oh, it didn't work. But it did work. You actually had some really nice profit there. Now, it might not be much, but remember, we're day traders. I know a lot of people think that they're going to get rich day trading, and the average legitimate day trader out there, retail trader, makes about $120,000 a year. That's the average. Okay. Now, there are exceptional traders out there, day traders that know when to apply pressure, and they are very good at what they do that make a lot more. But the average is about $120,000 a year. Now, some of you, I actually have said this before in a video, and somebody argued with me and said that isn't true. And coming from someone that is watching the videos, you should probably zip it, because those are facts. You can look it up, and that's what the average day trader makes, which is fine and well. But I'm sure we all get into this not to be average basic bitch traders. So we need to do things properly. And the way to do it properly is to pay yourself on these trades on the way up, taking small profits. The way that you kind of get over that hump of making that 120,000 is by paying yourself in short little increments. There are going to be plenty of opportunities throughout the year where as it's coming up, it is giving you immediate follow through. And then obviously you can relax on your targets a little bit, because you can obviously see once you gain more experience that that's what's going on and the action is coming up. Going back now, I'm going to erase this because we are simply talking about targets. So execute here, first target here. So that's number 1. It's number 2. It's number 3. If it doesn't line up with that, which it does. So number 2 and number 3 are the same target. This is number 4. Open is 5. And depending on how it comes up too, right? So if it dips back below, when it comes up, you have to pay yourself into that. Pay yourself into that. Now, some of you might be asking the question, well, what happens though if you run out of contracts or you run out of shares and you want to get that top target? Well, you're not being content, and what you're doing now is being greedy and not trading professionally. This is a hard concept for a lot of new traders to understand, and I'm sure there's going to be people that will argue with me on this. Don't do it. You're wrong. Simply put, you're wrong. What you need to be doing is always paying yourself into any level that can possibly reject. If you do that, and I hope you guys are hearing me, that's how you break that $120,000 a year threshold as a legitimate professional trader. If you can do that, you pay yourself small, you will actually start making more money. Now, you might be wondering why. Because what generally happens, and I've already said this during this video, as it comes up, so you execute into that level and it starts coming up, if you don't pay yourself into those very tight little ranges, it's going to come down and it will stop you out, or you will stop yourself out. Okay? That's what's going to happen. So a trade where you would have made a couple $100, whatever it is, $50, $100, $1,000, $10,000, doesn't fucking matter. Whatever that price point is, whatever that P&L is, you now just fumbled that bag. And you let even that $25 slip through your fingers, guys. It happens all the time. How many times have you seen a trade come into a support level, come back up just that little bit, and then fail? Well, this is the difference between a lot of traders, new traders, struggling traders, and myself. I am locked in on profit on that, and I am green on a failed position. You can still be green on trades that simply don't work. So this is why it's so important to be paying yourself into those tight targets. And if you need to review this, I would review this. Take a look at what I've drawn there, and then look on the actual chart and take a look. This is what I call, and it's a very small portion of it, natural movement theory, which is proprietary to me. This is how I've looked at support and resistance and price action and everything else. And again, let's have a healthy relationship with words. This is a very small portion of that. It's not the whole thing. It's very small. So that's why these targets are so crucial. And if you don't know your targets prior to entering and how you're going to pay yourself, you're going to get caught like a deer caught in the headlights, man. And you're going to fail. And I don't want to see that. That's why I make these videos for you guys. Like I said, I've been doing this for the past 11 years with wild success. I want you guys to be as defined as a trader as I am, and as successful as a trader as I am. That's what I want. That's why I'm doing this for you. So the next thing I want to talk about is being content. And I mentioned this before. What does that actually mean? So I'm going to fill you guys in on something for those of you that might just be joining me on this channel. Maybe you've never heard of me. Maybe you've never seen my videos. That's fine. Members know what I'm about to say because I talk about it all the time. A lot of people, they don't think about being content in these trades because everyone gets into trading to make money. You have to ask yourself the question, like, how much is enough, right? And this is a really important part to like put it into why we want to pay ourselves in these targets. Like, how much is enough for you, right? Like, even me, my average trade can be anywhere between $3,000 and $5,000 per trade, which is an insane amount of money when you really think about it. Well, even if I execute a trade and I make $50 on that trade, the only thing that matters to me is how I executed that trade. Did I trade that trade well? And if the answer is yes, that's all. That's all that matters. It's very difficult for new traders to get over that hump of trying to trade for money. Every time I make a video about this, there's always at least 1 to 3 jokers out there that, again, they argue with me on that. Well, of course we get into trading because of money. Dummy, you're not hearing the words coming out of my mouth. When you make things about money, you will absolutely fail. Do you think a surgeon goes into every single operation and be like, boom, that was another $100,000? Do you think in baseball, a professional athlete, let's say the pitcher, throws the ball, and every time he throws that ball, he's like, boom, that's $50,000? Do you know what I mean? Do you know how stupid that is? So why is there such a major disconnect for day traders or traders in general? It's because you're probably a part of the circus. And what the circus is watching channels and videos for entertainment instead of pure education, something that you can actually get some value out of. And I think that that's a really important first step, is cutting out all of that noise that is not going to help you, where it is just simply about entertainment. It's about the circus. If you want the circus, then this isn't for you, man. You will lose everything. You'll lose every dime you have, and you might have a little bit of success from time to time. It'll be random. It won't be consistent, though. And you may be telling yourself, all I need is one big trade. That's not the case, because even if you make that one big trade, and let's say you made a $500,000 trade, which is a ridiculous trade. It's huge. It's life-changing money. The odds of you losing all of that in a very short period of time are very high. And for those of you telling yourselves, well, I'm different, I won't do that. Yeah, but you will, because you've never taken the time to do things properly. It's about doing things properly. And I think once we Once we start doing that, we make that first step of doing things proper and being content with how much we make in a trade, because a lot of traders that get into this, they don't think about where their skill set is. And one of the things I correct all the time is people will say, "Oh, I only made $20 in this trade." I say, "Yeah, but how much money are you expecting to make?" It's like you took one contract or like a couple of shares. What type of money could you possibly make off of that? So why even make that statement? That tells me when people make statements like that they're solely in this for money. And yes, we're all guilty of it. We all do that. The very first time I got into trading, that's all I thought about. It was like, yeah, I'm going to be a millionaire, right? And then reality sets in, and then you have to do things differently. So for those of you that are still continuously trying to chase money and you're wondering why your results aren't changing, you need to look in the fucking mirror and you need to get into the reasons why you're solely looking at money. And the solution will come because you're looking at it from a monetary perspective instead of from a skill perspective. Anything worth doing is worth doing well. We've all heard that statement. So if we take the time to do things well, guess what happens? The profits will come. But you need to do things properly. And that's why with targets, it's so important. Targets are very important, folks. And if you don't do that, you'll never make more than that 120, if that. Because you're constantly going to miss your payment. You're not going to bank that money and it's going to reverse on you, because a lot of trades reverse when they hit that first level of resistance on the way up or support on the way down for the short. I know I've drawn out only longs, but all of this information is applicable to the short as well. If you pay yourself more, don't worry about running out of contracts or shares. You're only limited. Well, you're limited by the size that you take. That's fine. It's okay. Get good first, and then you can size up. If you're sizing up just randomly right now, you're going to have random results. The best thing that you can do is, number one, have a plan. Be proactive. Basically, to wrap this video up, be proactive, have a plan. Number two, be content. And number three, make sure you actually execute that plan. If you have targets, execute those targets. It's not just about entries, folks. Everybody wants for me to give them the secret sauce strategy, entry strategy. That is about this much, that much of trading and how important it is. It's important, but it's about that much important. And that is the truth. There's a lot to this, and everything is on an equal playing field of a level of importance. But people like to give certain things more weight, like entries more weight than your exits, right? So before I wrap this up, let me erase this, and I'm going to give you an example of how to pay yourself with size, how to enter and how to pay yourself. So let me flip over to this chart here. This will be a little bit better for us, and I'm going to draw out some levels. Okay, so we are going to work with a 10 contract position. If you are trading shares, you can add a 0 or add another 0, whatever your sizing is. But we will use a 10 contract position. Now let's talk about how we would enter. So we'll work off of a long. We'll be buying calls. And this is our long level. This is our short level. Market opens up. It comes down. As it's washing here, this is where I'm entering, right there. Okay. So on that first entry, if I have 10 contracts to work with, I am going to enter in with 2. As it comes down into the level, I will enter another 2. So I'm only at 4. I have 6 left. Okay. So let's say it washes. Do not stop out on that wash. You are going to enter another 2. You're going to correct. So you have 6. You are now 6 contracts in. You have 4 left. As it comes up into this level, you have 2, 4, 6 contracts. When it retraces, and it will, to retest, you need to get out all 6 right there. Get out. So you might be asking, well, what if it keeps coming up? Well, it's not going to keep coming up. What's going to happen here is it'll come into the first level of natural, pop up, it'll fail, and it'll make its way back here. And if it is truly strong, it'll hold this. Now, since it's already failed once and it's remounting, instead of entering with 2, wait for it to come nice and close into that level. You've already booked profit. So on this, I enter in with 4. As it comes up, pay yourself 2. Blast through. If it hits this next target, you'll pay yourself another 2, and your trade is done. That is 10 contracts. So do you see what I did there? A lot of people think that they are trading with a 10 contract position that they need to enter in all 10. You always want to be leaving bullets in the chamber, so to speak. And what you have here between these 2 trades is a 10 contract position. What I just showed you there is really the secret to success, because why? You're always thinking about risk. You never want to be in your max size. Even if your max size is small, don't do it. Because there will be situations where you enter in on 4 and it washes. And you're going to need those 6 to correct, come back up, and you get out, and you will be probably scratch or maybe positive green by a couple of bucks. But guess what? You're green. It is about management. What I just shared with you is trade management in this one particular example. But that's how you work a 10 contract position. You're never entering in with all 10. And that's where a lot of people make that mistake. So this is just one of many methods to use with sizing and trade management. For the people that are still watching, congrats, you actually are not part of the circus and you're paying attention. So if this is the first time viewing my channel, gotta like the video. Nothing in life is free, folks. That's all I'm asking for, some pretty solid free content. Remember, this is just free content. If this is your second time coming to your channel and you're not subscribed, that shit don't fly here. You have to subscribe and you have to like the video. If you are subscribed, thank you. You're great, but you still got to like the video. That's all I ask, is something to pay it forward here, some level of payment. Thanks, guys. I hope you had an educational time. I hope you learned something. If something that I talked about here went over your head, that's okay. Review it. That's a beautiful thing about videos. You can always rewatch them. Adios, folks.